Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is December 4th, 2025, and we're diving into the third quarter earnings report of Science Applications International Corporation, or SAIC. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. I'm excited to discuss SAIC's latest earnings report and what it means for investors.
Revenue and profitability overview. Let's start with the top line. SAIC reported revenues of $1.87 billion for the third quarter of fiscal year 2026, which is a 6% decrease compared to the same period last year. John, can you elaborate on this decline?
Absolutely. The revenue decline is primarily due to a ramp down in volume on existing contracts and the impact of the government shutdown, which accounted for approximately $16 million. However, this was partially offset by new contract wins. Despite the revenue drop, SAIC managed to achieve a net income of $78 million and an adjusted EPS of 2.58, which is quite impressive.
That's interesting. How did they manage to maintain profitability despite the revenue decline?
SAIC's strong program execution and cost management played a crucial role. Their adjusted EBITDA margin was 9.9%, reflecting efficient operations and sound financial management.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 2.7 cents based on a survey of 5 analysts. SAIC reported an adjusted EPS of 2.58. John, what does this tell us about the company's performance?
This is a significant beat on the EPS front. The actual adjusted EPS of 2.58 exceeded the forecast by a substantial margin, indicating that SAIC outperformed expectations. This can be attributed to their effective cost management and strategic focus on high-margin contracts.
How might this EPS beat impact investor sentiment?
Such a strong performance relative to expectations is likely to boost investor confidence and could positively influence the stock price. It demonstrates SAIC's ability to navigate challenges and deliver value to shareholders.
Strategic initiatives and contract wins. SAIC reported net bookings of $2.2 billion with a book-to-bill ratio of 1.2. Can you tell us more about their strategic initiatives and recent contract wins?
SAIC has been very active in securing new contracts, which is evident from their strong net bookings. Notable wins include a $1.4 billion task order with the U.S. Air Force and a $413 million task order with the U.S. Army. These contracts highlight SAIC's expertise in IT modernization and mission solutions, which are key growth areas for the company.
And how does their backlog position them for future growth?
With an estimated backlog of $23.8 billion, SAIC is well-positioned for sustained growth. This backlog provides revenue visibility and stability, allowing them to plan and execute their strategic initiatives effectively.
Cash flow and capital deployment. Let's talk about cash flow. SAIC reported operating cash flow of $129 million and free cash flow of $135 million. How is the company deploying this capital?
SAIC is strategically deploying its capital to enhance shareholder value. They repurchased $94 million worth of shares and declared a quarterly dividend of 30 cents per share. This reflects their commitment to returning capital to shareholders while maintaining financial flexibility.
What does this say about their financial health?
It indicates a strong financial position. The ability to generate robust cash flow and return capital to shareholders through buybacks and dividends is a positive sign of financial health and management's confidence in the company's future prospects.
Operational efficiencies and future outlook. SAIC's adjusted EBITDA margin was 9.9%, and they have increased their fiscal year 2026 guidance. What are the key drivers behind this positive outlook?
The increase in guidance is driven by SAIC's focus on operational efficiencies and strategic contract wins. Interim CEO Jim Reagan emphasized the company's commitment to long-term shareholder value creation, with initiatives to fuel growth and drive margins higher.
How does the leadership's focus on growth and margins impact their future strategy?
Leadership's focus on growth and margins is crucial for sustaining competitive advantage. By optimizing operations and targeting high-margin contracts, SAIC is positioning itself for continued success in the evolving defense and intelligence markets.
Key takeaways. In summary, SAIC has delivered a strong performance in the third quarter of fiscal year 2026, with significant EPS beat and strategic contract wins. John, any final thoughts on SAIC's investment prospects?
SAIC's robust backlog, strategic focus, and strong financial management make it an attractive investment. Their ability to navigate challenges and deliver consistent results bodes well for future growth.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on SAIC's performance in the comments below.